So stocks are looking to close out another strong week on a high, but there's a lot of options expiring today. Could that derail us? That's the big question. Good person to go to that with is Yahoo Finance's Blikre. He's over at the New York Stock Exchange and is going to break it down for us. Hey, Jared.
That's right. I can almost see the options floor a few dozen feet away. Let's go to the Wi-Fi Interactive and take a look at the S&P 500 here real quickly. Over the last couple weeks, especially the last 11 trading days, this goes back to the non-farm payrolls, and what I'm writing about in the morning brief is we have just accelerated to the upside, and that is as the rally is finally broadening. But I want to stick with options expiration for a second here. On the indices like the S&P 500 and the Russell 2000, the Nasdaq, those options expire on the open, so that's already done. Now in the ETFs, that's in later in the day, after the market close, it's actually on the last tick, same as individual stocks. Nevertheless, by the end of the day today, a lot of gamma will have rolled off the market. Now, what does that mean? Gamma is something that builds up as the options volume increases, and as dealers have to hedge their positions, let's say they're buying or writing options, they have to offset those. This can cause an immaculate cycle, call it, whereby they're forced to chase the price higher, and that's happened with a number of stocks. Suffice to say, go back to the Wi-Fi Interactive here for a second. This is the sum of the S&P 500 and SPY. That's the S&P 500, the biggest S&P 500 ETF. Gamma, that's expiring within 1% of spot. 6 months out, and you can see this peak right here. This is higher or just as high as just about anything we experienced in 2021, and that was at the height of the options and the GameStop frenzy right in there. And then you go back, some of the greatest I would say hiccups in the market, in the options market, were actually during the Volmageddon, and you can see a lot of volatility around there. What happens from here? Hard to say, but next week, at least in the very short term, markets should trade a little bit more normal. You're not going to have prices distorted by all these options effects. So that's a little bit of, you can say good news or bad news. If options dealers are having to chase the prices of your favorite stock, it's probably working in your favor. Going back to the S&P, going back to the Wi-Fi Interactive, just want to check the sector action over the last 5 days. Look at that, XLK up 5%, that's tech, followed by industrials and consumer discretionary. Those are a lot of retail stocks. We've seen consumer discretionary in the cruise lines, the airlines, the reopening trade. Well, those have exploded to the upside. And you take a look over the last 11 days, and remember 11 trading days ago, it was at non-farm payrolls when we got those job numbers where I saw good news becoming good news for the first time in a long time. Retail, consumer discretionary, XLY in the upper left corner, that just takes the show up over 8%. So are industrials up 8%, then materials, tech also in the top row there. So really good to see a healthy mix of different sectors participating in this rally. And finally here, I have one more thing to show. Let's see if I can get it up. May not want to cooperate, but just in terms of the price action of some of the stocks that have led the S&P 500 over the last 11 trading days, what I've been writing about in the morning brief, cruise lines at the top there, Carnival up about 30%, Royal Caribbean, not actually Norwegian Cruise Line, not too far behind, and then you see other names like Stanley, Black & Decker up in there, so a really broad swath of stocks finally starting to break out here.
Jared, thanks so much for the update there, and we're going to be watching into the close to see some of those ETF options expirations as well. Thanks so much.